Dear students, we have already learned how to compute total income and also computation of tax liability thereon. But in this problem, we'll learn how to compute the tax liability of a company where minimum alternate tax is applicable. This is video number 2 connected to that. I'm Dr. Panduranga Nayak, Principal SVS College, Bantwal. So we'll solve this problem number 2. Okay. ABC Limited is engaged in the business of manufacture of chemical goods. The following information is given. Okay, a problem is given wherein profit and loss account is given and some additional information is provided. Deduction under section 80 IB, which is relating to small scale industry at 30% of profits. GST for 2018-19 paid in this year 65,000. This is not debited to profit and loss account but paid during the year but before filing the income tax returns. The actual depreciation is 4,60,000. See, if you look at the debit side of profit and loss account, you find depreciation 4 lakh. Okay, while computing the business income, 4 lakh should be added, and what is allowed, 4,60,000 should be deducted. Or else the net amount of 60,000, 4,60,000 minus 4 lakh, 60,000 must be deducted from the net profit. And this 30% should be deducted while computing the business income. And GST paid, if it is paid before filing the income tax returns, could be deducted, and therefore this is allowed. While computing the book profit, only the amount debited here 4 lakh that should be added and once again deducted unless it contains revaluation reserve. Therefore, that is in the case of computation of book profit. Look at the following items. Brought forward business loss of 2018-19 11 lakh, and for accounting purpose 9 lakh. Unabsorbed depreciation is only for accounting purpose 3 lakh. See what is given here for tax purposes. This should be taken while computing total income, business income as well as total income. Whereas what is given connected to the accounting or which is given for accounting, this should be considered while computing book profit. In the case of computation of book profit, so of the two, brought forward business loss of previous year or earlier years 9 lakh or unabsorbed depreciation of earlier years 3 lakh, of the two, whichever is less, that is deductible from the net profit while computing book profit. Whereas these 11 lakh brought forward business loss, these things should be, this value should be deducted from the business income. If there is enough business income, from that you can deduct the 11,000. If not, that can be carried forward. Now look at the debit side of profit and loss account. Depreciation is to be added back, and what is allowed as per income tax rules under section 32, that should be deducted. Salary and wages allowed. Entertainment expenses are allowed while computing business income. Traveling expenses are allowed while computing business income. Income tax is not allowed while computing business income. See, while computing total income, we have to first calculate business income. So, while computing business income, income tax is not allowed. Then wealth tax is also not allowed. Outstanding customs duty is not allowed. But if any amount is paid from out of this before filing the income tax return, then that is allowed. Income tax returns for companies to be filed before September last. Provision for uncertain liabilities. Okay, this is not allowed both for accounting purpose, both for a computation of business income purpose as well as computation of book profit. Then proposed dividend is not allowed in both the cases. And then loss of subsidiary company, this is also not allowed in the case of computation of business income as well as book profit. Fee to tax expert is allowed in both the cases. Salary to MD is allowed in both the cases. So on the credit side, what is given is allowed, and therefore no question of deducting it while computing the book profit as well as while computing the business income. Okay, regarding computation of business income, let me tell you what is to be added. Number one, income tax. Wealth tax is not to be deducted. Remember, while computing business income, you have to add, but not to add wealth tax while computing a book profit. And even outstanding customs duty not to be added while computing book profit. Whereas provision for unascertained liabilities, proposed dividend, loss of subsidiary company, these are the items to be added to net profit while computing book profit. Okay, this is about the treatment of various items. Let us see now the computation of business income. And here only one head of income is there, business income. There are no other heads of income, like income from house property is not there, income from business is there, whereas capital gains are not there, income from other sources is also not there. So total business income itself is the gross total income as well as total income. Okay, so let us confine ourselves to computation of business income. So as per the net profit, if you look at the net profit here, 17,65,000. So this will take as a starting point. Then add disallowed items or inadmissible expenses. What it means is these items are debited to profit and loss account, whereas not allowed while computing business income. Therefore, they have to add back because they are debited to profit and loss account. Because of that, the net profit has come down. So you have to remove the impact of that. Therefore, you have to add back. So disallowed items or inadmissible expenses debited to profit and loss account. Now you have to add back. Like income tax, I told you already, wealth tax, outstanding customs duty, provision for unascertained liability, proposed dividend, and loss of subsidiary company. These are the items to be added. Whereas while computing book profit, income tax should be added back, but not the wealth tax, but not the outstanding customs duty, whereas the rest of the three items to be added back. Okay, so these are the items added. The total is 4,35,000. This will be added to net profit. As a result, 22 lakh will be the total. Now you have to deduct the depreciation. So depreciation, here we have taken the net value. Otherwise, what you can do is you take 4 lakh here, you add 4 lakh and deduct 4,60,000. The net effect will be one and the same. So I have taken the net value. 4,60,000 is debited to profit and loss account, whereas what is allowed is what is debited to profit and loss account is 4 lakh. See here, what is debited to profit and loss account is 4 lakh, but what is allowed is under Indian Income Tax Act is 4,60,000. So further you can debit to the tune of 60,000. So 4,60,000 minus 4,60,000 is deducted. Alternatively, what you can do is 4 lakh you add, 4,60,000 you deduct. Of course, the net impact will be one and the same. GST paid for 2018-19. So this is not included in profit and loss account, but it is paid, assumed to be paid before filing the income tax returns. Therefore, that is added back. So 65,000 it is given here. The total is 1,65,000. So if you deduct that, what you get is business income 20,75,000. Business income itself is actually total income here, but before that you have to adjust brought forward business loss. This is to be set off. So 11 lakh it's given here for tax purposes, brought forward business loss of 11 lakh. So this should be deducted. If there is enough amount, you can deduct. So 11 lakh is there. Sorry, 20,75,000 is there. The loss brought forward is just 11 lakh, so that can be easily set off. So what remains is 9,75,000. Then deduction. So this is equal to gross total income. I told you there is no other head of income. Business income itself is gross total income. So there is one deduction under section 80 IB at the rate of 30%. So this is to be calculated on the gross total income after set off business income after set off. Business income and gross total income here are one and the same. Actually, it should be deducted from business income. So here 20 lakh 75,000 minus 11 lakh. So business income is also 9 lakh 75,000 and the gross total income is also 9 lakh 75,000. So of that 30% 2 lakh 92,500. So what you get is 6 lakh 82,500. So this is the total income. Now we will calculate the book profit. So here also starting point is net profit as per profit and loss account 17 lakh 65,000. And what are the items to be added? I already told you income tax but not the wealth tax. Remember, provision for unascertained liability, loss of subsidiary company, proposed dividend, depreciation. These are the items to be added. And then next thing is what is to be deducted. Say depreciation. Depreciation. What is debited here? 4 lakh. Same thing should be deducted unless there is depreciation on revaluation of assets. So only if there is any change then it should be different, otherwise it will be one and the same. So item depreciation should be taken as it is. Okay. Only if there is revaluation of assets, to that extent it should be reduced. So 4 lakh should be taken as it is, whereas here of that 4 lakh if there is any depreciation or revaluation of assets, so that should be excluded. In some problems that will be there. That is why this item is once added and once deducted if there is no depreciation or revaluation of assets. If there is revaluation of assets, supposing 4 lakh includes rupees say 1 lakh on account of revaluation of assets, then 4 lakh should be added whereas 3 lakh should be deducted. Okay, then another item is brought forward business loss or unabsorbed depreciation, whichever is less. So 3 lakh that should be deducted. So total deduction in this problem only 2 items are there which are to be deducted. So 7 lakh. So the net value, that's nothing but book profit 18 lakh 75,000. Now we have to go. So in this problem, first you are calculating business income. Total income. Then you are calculating book profit. Third one, you have to calculate the tax liability applying MAT. So here what you have to do, first you have to calculate the tax on total income. Then you have to calculate tax on book profit. Then you have to compute the tax liability. What is tax liability? Tax liability is equal to tax on total income or tax on book profit, which is called minimum alternate tax, whichever is high, not less, whichever is high. Okay, because some companies I have already told you, they managed to see that there is no tax liability at all. As a result, they won't pay any tax at all, or they pay very low tax amount. To avoid that, minimum alternate taxes has been introduced. That's why the formula tax on total income or tax on book profit, whichever is high. Okay, first computation of tax liability on total income. Okay, tax on total income 30% of 6,82,500. That will come to 2,04,750. Surcharge. So we assume that it's a domestic company and total income does not exceed 1 crore. So surcharge is not applicable. In case it is more than 1 crore, surcharge would have been 7% of the total tax on total income. Next, health and education says that is 4% of the total of tax on total income plus surcharge. So that comes to 8,190. That's at the rate of 4%. So if you add health and education cess to the tax on total income, then that will come to 2,11,940. I come to MAT, minimum alternate tax. In other words, tax on book profit. So tax on book profit is at 15% on what? On book profit, 18 lakh 75,000. That comes to 2 lakh 81,000. Then surcharge is not applicable because the book profit does not exceed 1 crore. So 2,81,250 only the total of both the values. Then education and health cess should be added at the rate of 4% calculated on this value. So you'll get 11,250. As a result, minimum alternate tax or tax on book profit is 2,92,500. Now what is the tax liability of the company? I told you the formula. Tax liability is equal to tax on total income or tax on book profit, whichever is high. Here you already learned tax on total income is 2,11,940 and tax on book profit is 2,92,500. Of these two, which one is high? I'm sorry, it should be which one is high. I have written the formula here, you see. Somewhere I have written, but whatever it is, whichever is higher, yes, it is written here. So, tax on total income or tax on book profit, whichever is high, it should be high here, not less. So, of the two, 2,92,500 is higher one, and therefore, yes, the tax liability is 2,92,500. Then MAT credit you have to calculate. What is MAT credit? If minimum alternate tax is applicable, then MAT credit is equal to tax on book profit. It's also called MAT, minimum alternate tax, minus tax on total income. As a result, the difference is in this problem 2,92,500 tax on book profit, 2,11,940 tax on total income. So the difference is 80,560. Therefore, this is the MAT. This can be carried forward. Next year, in case tax on total income is more, MAT is less, then this credit can be used to reduce the tax liability. So, thank you very much. We'll take up some more problems in the next video.